following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 17th, the fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. How about we have an extraordinary one? Let's have an extraordinary day. And, of course, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, during this next hour, I'm here to serve you. So feel free to pick up that phone, dial on in at 877-927-6648. If you can't dial in, we've got you covered. You can always send me an email, steve@tfn.com. Inside the subject heading, if you would be kind enough to put radio show question. Of course, in the Tiger's Den, any ping will do. So let's go ahead and get this show started on fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, we got the Dow up 36 points, the only indice that is in the green. That's including the spot volatility index, which is down 10 pennies, trade out at 15.19. We're going to have to peek in on that, see who's playing liar's poker out here. Gold is off $10. Silver's down 11 pennies. Light sweet crude is flat. Lead the charge to the upside is just Fastly Inc. up 54% or $8 and change. Granger WW up 7. Humana up about 6 and change, 665. AutoZone 482. Cray 570. To the downside, it is Rogers Corp. Down 511,000 shares. Maybe that's big volume for it. It's 24 buckaroonies, 14%. Baidu off 24 bucks and nearly 16%. Mercado Libre down 19 or a little over 3%. So plenty to look at. Of course, I want to look at what you want to look at as well. So what do we want to do? Let's understand today's markets out here. Let's do that. The easy way to do that, my opinion, is let's take a look at the Dow. The Dow is the upside. I'll do that via the Dow Equity Futures contract. Of course, you knew that. And we're just taking a look at the 30-minute time frame chart. If we take a look at what price has done so far, just up against resistance, up against the resistance of the breakdown. The breakdown that occurred right here on a 30-minute basis. Let's get that crosshair out here. That took place at exactly 21:30 hours. That was last evening. That price is 25,911. You're 25,905. That area is going to be tangled with, or appears to be wanting to be tangled with again. Really, right as we speak, we can see that. So on this next 30-minute bar out here, we're at 110. Let's say at 130. If we are trading above, and at this stage here, what we've got to do, this is how I would do it. Maybe you would do it differently. I would use the high from the bar that closed over just by a tick or two at 11:30 this morning. If you see a close above 25,949, what you should anticipate for the remainder of the afternoon, or at least for the next hour or so, is a push higher. That's what's been going on in the markets. The Dow, we'll take a look at the other ones, okay? The other ones being the other 4 equity futures contract. You can see, in essence, all doing the same. The NQ testing resistance. Again, the breakdown level. The breakdown is where you see those green horizontal lines out there. It's not something I drew in there, something automated by the setup 9 count that I use out here. You should use it too. You don't have to, but you really should use it too. Imagine the benefit of that if you were an intraday trader. Yeah, because it's going to be different levels of breakdowns and breakouts in other words, support and resistance, than you might ordinarily take a look at. Like many on this ES mini chart would have been looking for the ES mini to get up to its prior swing point high. We were all taught that. Well, maybe you weren't taught that, but I most certainly was taught that, and I always look at the swing points. But now, when there's some other information, other piece of information that's available to us, I want to understand where the breakdown really took place. And that was not the swing point. It was right here at this bar. It wasn't bar number one. In this case, it was bar number two. How does that work? Hey, when things are moving, if they're having a counter trend rally, they're going to typically try to get back to the level that they broke down out there. So what you're going to be watching in the ES Mini, pretty simple. It's 28.8250. That would be the number out there. No level of support, by the way, has been broken inside the ES Mini or the Dow or the NQ as we took a look at those 30-minute time frame charts. If we take a look at the Russell 2000, what did the Russell 2000 do? Got up to resistance. Failed there. Resistance again being the breakdown level. What did it do? Maybe the Russell is the one to watch. The Russell 2000 makes its way all the way down to where things broke out. The breakout level, that red horizontal line. How does it work? Actually, it's kind of simple. When prices pull back, they pull back to breakout areas. When prices break down, if they're going to have that counter trend move, they make a counter trend move to the breakdown area. Won't say that again. Well, I might, but and if I do, okay, so be it. If we take a look at Goldilocks out here on a 30-minute time frame, that's trading down $10, and it could be double trouble out here. We can see this broke through a level of support earlier this morning. The specific time out here, well, the first break below that was at 6:30, and then at 9 o'clock it was crushed to the downside. Support did not hold, and then price moved lower out there. You've got a little 9 count on the 30-minute chart. That's really not the problem. The problem is this. This is one of the problems. That's right. You see it right here, right now. Price, the gold contract, trading below a bullish structured profile. The bottom of that box, 1281.40. Now, the trading session is not over. This is a daily profile level. All I can say is it doesn't look good now. Things might change by the end of the day. The number to be watching is 1281.40. Does that mean it's the end of it? No, but it is not good to be below support. Whoops. Somehow, where did that go? Huh. Oh, okay. No, I'm sorry. Hello, get your act together, Steve-O. The other issue out here, so now you got a break of support. Now we're going to see a second break of support. That is a trade. That is a close. Well, I don't know if it's going to close, but right now trading below Stevie's red line. That's at about the 1283.80 area out there. That's a problem, too. Because what we know about gold right now, it's got a falling price oscillator below zero. So this is starting to get real iffy out here. Still has the potential at the bottom because that seventh wave move is out there. Hasn't failed just yet, but maybe that's where price is headed to out here. Key levels of support have been broken inside of Goldilocks. And silver, we'll get back to this break. Nobody's asked yet, but here's the chart for silver. Not a good scene here. And I've got no bottom signal whatsoever there. Steve Rhodes with TFNN. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So the chart that we've got on the screen right now is the monthly chart for silver. And as we take a look at it, you can see silver right now trading at about 1439. And the number to be watching, well, there's really going to be two numbers out here. I should be respectful of both of these bullish reversal patterns out here. I'll explain those to you in just a moment. Let me square away this chart here so you can more easily, just simply so you can read the price points out there. So let me put that at the right, but let me put this at the bottom. There we go. So here's, so when we're taking this, is a monthly time frame chart. The first thing that I wanted to share with you is that prices below daily, weekly, monthly, and quarterly profiles out there. I mean, so in looking for support from a profile standpoint, been blown away. Granted, the month is not over. It's only May 17th. We don't know if there's going to be a close below the bottom of that monthly profile of 1453. Just the mere fact that it's trading below it is not really a great thing. It is a bullish structured monthly profile. Trading below that makes it doble-gee not a very good thing. Now, what we look for is where is their support? And with regard to where is their support, you and I are going to rely upon the bullish Japanese candlesticks. When did the cavalry arrive to defend their territory? And what we know is during the month of September in 2018, that formed a hammer candle. And that level is 1427. You know the expression, if you close below the low of a hammer candle, if you're long, you're wrong. We just like, that's kind of like the nice to have an expression like sell away and sell and may go away kind of thing, but there's way more to that. there is more to this too. But in this case here, we also happen to have a three-river Morningstar pattern. And that says, therefore, that support would be the low of that candle session. That is a group of 3 candles. And in this case here, it is the low of November 2018 at 1416. Those are the 2 numbers to be watching. Will price find support there? It may. If it does, it wouldn't surprise us. And if price closes below that, it is not a good thing for silver. Then that always makes me question, well, so what does that mean for gold out here? And at this stage, remember I said, hey, I don't always use the swing points to look for breakouts, breakdowns, so on and so forth. In this case here, the only thing I can go back to is the 2008 lows, which we're trading into right now. And that level, by the way, is $11.38. We'll just go ahead and put the line on there. You'll be able to see it if you're watching on Tiger TV, the archive, however it is. And so that is 1138. And again, the daily charts, if I'm looking for some type of turn, it ain't there. I can't come up with a wave count. There's no TD setup 9 count. There's A to B equals CD patterns out here, but without any kind of bullish reversal signal, it's just not there. So it is not looking good for high ho silver. And even if we take a look at the shorter term time frame, 60, 120, 240, those are the minutes that I'm referring to, everything below the bottom of those profiles too. So what does this mean, Jelly Bean? I don't know. We're just simply going to have to come back and continue to monitor it. But, look, just make sure if you are in the mining positions out there, they're holding up pretty well. The GDX is basically flat for the day, so that's a positive. But what the GDX is not likely to do, or the mining issues are not likely to do, is if you see these continued breaks of support out here, there should be just a flushing to the downside out here. So I don't know if the GDX is generating any kind of special message for us. If we look at the GDX itself, let's go just monitor that on its own. Let's pull up GDX right now. What are we going to see? So the positive here is, if there's a positive, that one positive is that at least it hasn't broken through its level of support, daily or weekly, above the bottom of the daily at 2027 and trading right at the bottom of the weekly, which is 2057. It's 2 pennies below that, but we're going to say basically trading right there. Still have a higher low in place out here. We don't have that. Well, we have a higher low in place with regard to gold, certainly as it relates back to that May 2nd area there. But problems inside of precious metal land. Now the GDX here, if we take a look at Stevie's green line, it's really red, and prices trading in essence right at that. That's 2043 out there. So gots to be careful with regard to, I believe, both the sector as well as the precious metals as we speak. Okay, so what else do we want to go take a look at? Let's go take a look at, John in the den posted something for me to take a look at. I think it was for everybody as well. And that was, he was looking at the Wilshire 5000. So let's go look at the Wilshire 5000. Let's do it in 2 ways out here. We always like to do things in at least 2 ways. What would be those 2 ways? Well, one is just trying to take a look at the weekly time frame chart. So in the weekly time frame chart, as we pull it over here, one of the things that John had pointed out, and rightfully so, was that it may be a double topping-ish type pattern. In other words, the previous high out here, let me get the crosshair, from way back in October, I believe it was, September, that high was not taken out, price turned from there. That kind of says to us, okay, maybe this is ready to turn to the downside. Hey, we talked about the three-river Morningstar when we looked at that monthly chart for silver. Here's a weekly chart for the Wilshire. It's got a three-river evening star. Now, as we speak right now, John, the problem is that, and I don't know where the end of day close is, but what we can see is prices trading above Stevie's green line for the week. If price closes over that, I can't really see it this way, so what I need to do is get my data window going, my little data box. Let's bring it over. Let's give up the number out here. It's 25559. That can't be right. The heck? Let me see. What was Stevie doing wrong? Oh, I didn't hit that. There we go. 29661. And just forget what I had just said before that. 29661. We're 29715. Here's the risk, John. I see exactly what you are seeing too. But I also know that we are in wave number 3 on a weekly basis. And not that price can't stop there, but it gets dangerous when you're only in wave number 3 on a weekly basis. And then price continues to hold Stevie's green line. So on the short side, I know what you're taking a look at. You really want to see today close below 29,661. That's what I see when I take a look at the weekly time frame. We reviewed that yesterday. We took a look at the NQ or the NDX 100. I don't recall which one we looked at, but let's go look at now the daily time frame. We're going to have a mixed signal here. You tell me which one is more important, and then you'll be able to make your own decision. For me, cannot ignore the weekly. You don't want to ignore the potential bigger picture out here. Now, in the case of the daily, what it supports is that, hey, you know what? It's a green line, so it's oscillator and change line. It's going to be different than a weekly time frame chart. And yesterday was in essence, a test and rejection of that level as long as price stays below that. Just says that there's more retracement. It doesn't have a falling price oscillator below 0. We know that support held. Support was the breakout area, that red line, different than any swing point or anything else that one would have normally monitored out here. So, hey, there you go. Is price trading below the highs out there? It is. Is the daily giving us a message that yesterday's counter-trend rally, that was it and could have been over? It does. But that message would be solidified with a lower close today in the Wilshire 5000 below Stevie's green line. That's what it needs when it comes to the good old Wilshire. Why do they call it 5,000? It's only like 3,000 issues. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So I got a question here from CJ. CJ says, hey, Steve, I asked you a couple weeks ago whether you could see a buy point on MMM. That's I love M&Ms, but that happens to be 3M out there for a longer term hold. It was trading around 185 when I emailed you. You mentioned 176 and 173, but said you did not see a clear bottom in sight. That was a good call because 3M is trading at 169 right now. We can see that on the screen out here. My question is, do you now see a good longer-term buy point? Thanks. Always enjoy your show. Thank you, Charlie from College Station, Texas. So, Charlie, here's the three different time frame charts. One of the things that we like to start with, just understand, where our buyers and sellers. So we look at the bottom and top of the boxes, daily, weekly, monthly. What we can see is no buyers. We can only see sellers, meaning that prices below the daily, weekly, and now monthly. Looks like we'll end the week below the monthly bottom of its box at 173.44. So sellers are clearly in control. We can see that we gapped down this morning. Gaps are your friends. They're also your foe, so to speak, at being able to identify resistance. Now, let's say you have a gap up on Monday for some reason, 3M, you create the island bottom, then Charlie, there would be your answer. I'm not saying that's what's going to happen. Just saying if it did because of the gap, you would use that to your advantage out there. But if I look at the daily time frame charts out here right now, or the daily time frame chart to look for some type of bottom signal, we don't have it. Today's going to be day 8, or looks to be day 8 of a TD setup 9 count, meaning that Monday or Tuesday could be a buy signal. Not saying that it is going to, saying it is something to take a look at. We would likely, because unless a new profile forms, if you're going to try to take some type of shot at it, you'd certainly want to see price above Stevie's red line out there. And right now, that's about the 170. Let's call it 175. It's going to change over the next couple of days anyways. But to answer your question, do I see anything on a daily time frame? I do not. When we take a look at a monthly time frame out here, well, let me see this. Let's see the weekly. Let me just take a look at the volume here. Here's the swing point. There's a couple weeks. So here's a swing point from December of 2018. Now, that's terrible. It's got 10.2 million shares. I don't know how to use that volume as a matrix. Let's use 1022. 23 million shares. When that was passed, it was 25 million shares. Okay, so now I feel a little bit better about saying these swing points are being blown away with volume out there. You're at 19, nearly 20 million shares this week. I don't see the let up inside of 3M. As far as how low can it go out here, look on a monthly basis. The December, granted a holiday, okay, but still December at 51 million shares. You're at 59. You're only the 17th. There is, in 3M land, in essence, a confirmed A to B equals CD to the downside on the monthly chart. Not easy to do. They've done it. And so what this says is, let's take a look at 136.85 or so when it arrives. Should it arrive? Maybe it's going to be 114.30, the A to B equals CD, 1.272 expansion out there. So I'd say let's look at Tuesday, probably, maybe right back to me on Tuesday. Of course, if you, do that, we can take a quick peek at it. But now's not the time. And do I have a price point? No. We've got to see a bottoming pattern as opposed to, these numbers I just gave to you. They're solid price projections, especially with the swing point being passed with volume and being below the bottom of a quarterly profile. So they're solid out here, but I want to take a look. We'd want to take a look at what transpires on a daily basis out there, see if there's any information to change our signal. So CJ out there, thanks for listening. Hope that helps with regard to 3M. Ruby in the Tiger's Den wants to take a look at, she's into coffee. So let's go take a look at coffee out here. And I think you just wanted me to take a look at it. I don't know what you were looking for, but here's what we can say about coffee. Also, trading below daily and weekly profiles out here. So in the case of coffee, that was at 90.69. That was the daily bottom of its box. About 92.40 or so is the bottom of the Well, 92.63 was the bottom of the weekly box. That's not good. You know, is price just hoovering around? Is it going to go tackle its most recent low? Its most recent low out here, we'll just grab that swing point and give you that price. That's 87.60. Yeah, seems logical. Is it going to blow it away? I don't know. Do I have any other kind of bottoming signal on a 60-minute, 120-minute? I don't. On a 240-minute, I don't. If we look at, what's this month? Oh, that's, I don't have the coffee up there. What can I do? What can I do? Let's open this up. Let's put this actually on a monthly. Oh, huh? Man, not looking good here. Wow. No. I'm not a Java drinker out there, but sounds like Starbucks, they must be making a fortune. I mean, look at the futures price of coffee. I mean, it looks like it's coming all the way back to the 1975 levels in the 68-ish type area out there. Ruby, kind of makes you wonder how a company like, what is it, Lycan? Something like that, has not been able to make any money. I mean, they haven't made any money before depreciation. I mean, I recognize they've opened up a ton of stores, but before depreciation of all their assets, I don't know if if they're using GAAP. I don't know what they actually use. These Chinese companies, they sometimes have their own form of general accepted accounting principles, which typically are unaccepted, generally speaking. But I'm not going to go there, and I'm not suggesting that. I'm just saying, man, their product cost is lower, and probably nobody is. I'm not a Starbucks. I don't drink coffee, so no reason for me to stop in there. They kept their prices the same. Probably have. So, anyways, I know you're asking me to look at coffee. Ruby, at this stage here, just looks like it's at least going to test the lows from May the 7th. That was a daily area, but I don't have any other types of signals for you to suggest that that is going to be a bottom. You also wanted to look at, what was it? Where did it go? Steve, can we look at coffee and sugar? No sugar tonight in your coffee. So if we take a look at the July contract out here for sugar, trade out 11.55, does not look good on the 120 or the 240 or the daily. Wow. Commodities just getting the old wackaroo out here. So, sugar has this A to B equals CD. We must have looked at this before. I'd assume Ruby looks like it's trying to complete that. That's in the 1133, but that's just the one-to-one. No reason it can't go to 1071, the 1-to-1.272. This is not a bullish reversal candle, not at least as of 1:37 in the afternoon. So this A to B equals CD is not a completed pattern when it comes to sugar. So again, below daily profiles, that was a bullish structured box out there. I think we just have to continue to watch for a potential bottom here. And that typically would occur if you see a bullish reversal candle over the next many trading sessions out there. So Ruby, I hope that helps you out when we take a look at no sugar tonight in my coffee, as well as, well, we got them both, no sugar and coffee. That's a beautiful thing. So right now, before we go to this breakout here, let's take a quick peek. You got the S&P is flat. Dow is up 49 points. Hey, how about those Chinese? Do you think they've got some smarts going on? One of the fastest rates of change in their currency in a long time out here. In just the last 9 days alone, the rate of change, 2.75%, on its way to 696 out there. That's how you counter increased tariffs. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we got a question here from Jim. Jim writes in, says, could we take a look at JP Morgan? JPM happens to be the ticker symbol. I'm looking to buy it for long term. I'm looking for a buy point. So here's what we know about JP Morgan. Well, first, just simply, price is trading above the bottom of its profile, not the top. Top is 113.49, bullish structured box. 110 is the bottom. Buyers should be able to push price up to 113.49. You're trading above the top of a brand new weekly profile out there. That's always bullish when a new profile forms below the prior one. And you're trading inside the monthly, which is a range of 100 to 100.58 to 119.33. Of course, that doesn't help you necessarily, but everything looks pretty bullish here. No, nothing is running away, so to speak, although you had huge gap to the upside back here on April the 12th. Now, that had volume of 25 million shares. Gaps are our friends and foes, so to speak, and price pulled back. That is a clear breakout area. We never know, is it the bottom of the gap? By bottom of the gap, I'm just simply going to, in this case here, use the low of April 12th, or was it the high of the gap, the high of April 11th, where price might pull back to? Well, price pulled back with volume, Jim, of 10 million shares, was going against the breakout volume of 25 million shares that was 2 days ago. That was one buy signal out here. Today, you get a bullish structured profile. Price is above that. Okay. Now, this just lets us know that price is going to move up to 113.49, or should. Doesn't tell us whether it will break it or not. But, and here's another interesting thing. Remember, we took a look at this day right here, 515, testing that breakout with light volume. Well, at that same day, you had a TD setup. 9 count occurring, bar number 9, which we know can also be a bottom. Now, so if you're asking, you want to take a risk, now is the time. Right here, right now, right this very second. But I would caution you. Here's the caution. You're saying long term. The daily basis hasn't necessarily proven itself to you because it could just be a counter turn rally into the top of that box daily, which also happens to be Stevie's green line out there. But you can take a stab at it. You don't want to see price close below the 515. That's a Who song low out there, which is 108.61. I like the song 515 by The Who, as I like many of their tunes out there. But that you didn't call me to ask me about the Who tunes. Now, on a weekly basis, what you've got this week here, Jim, which supports going ahead and taking a stab at it, by the way, is the fact that price pulled back to Stevie's green line, something you anticipate when the line changes color as it did on April 19th. You expect price and line to catch up to each other. In this case here, it did. We've gotten a bullish rejection of that level. Not bad. So there's another signal. Not a guarantee that it's going to work, but you've got what it is that you need out there. But don't forget, Mick Jagger says you can't always get what you want out here. And what you wanted was to see price trading above that green line on the monthly time frame, 114.62. We don't have that. You're so close to resistance out here. How do we know that? Look at the Three River Evening Star candle formation out here. That says resistance out here at the highs of 119.33. A shooting star out here in September 2018 out at 119.24. So your risk reward is somewhat questionable, knowing that there's resistance out there. But you've got a reason, a hankering to want to buy JP Morgan. If you're, now is the time based on the tests that we just took a look at. The last thing that you've got to, and I've got to, we've all got to consider out here is the following, and that is we must understand, it's like when I go to the beach, I'm always cognizant of whether there is some type of undertow out there, right? And I kind of consider the undertow to be somewhat of a seasonal thing, but not really. But I kind of use that as an analogy to the market of the seasonal cycle. When you got an undertow out there, not really best to go out there without a board or something. Because there's plenty of days where there really isn't that undertow. Well, we happen to be in the unfavorable seasonal cycle out here. And the question is JP Morgan going to be one of those stocks? Let's assume that the seasonal cycle is going to take hold. And in essence, we continue to overall bigger picture migrate down to a bottom in October, certainly June out here. Is this going to be a stronger than index stock that you want to stick with? I have reason to believe the seasonal cycle is kicking in. Whether it does or not, different story. So don't go with my belief out here. Back to the question, if we're just simply taking a look at JP Morgan, then now is the time. You keep a stop. You do that stop again below the low of May 15th. And if you get a close below that, then you stop out and you continue to look for some type of bottom out there. You just, you take a smaller loss. Just always use good position sizing. So in summary, JP Morgan looks really good. Do we have to worry about the unfavorable seasonal cycle? If we had that going for us and didn't have to, it would be a clear buy. Right now, I think you just have to be careful. Just be prudent. Hope that helps you out. Pat writes in, good analysis. Whoa. Okay. So I got a message here from Pat, but Pat, this is so long, I'm going to have to read this. I think it's somebody who's writing this, some analyst. Warning. Okay. Well, thanks. Well, Pat, thanks for that. I'll go ahead and read it. It's so long I don't want to necessarily, not that I don't have the time, but I won't read that on the air right here. Okay. So what do we want to look at next? So I don't have any other questions. Is there anything in the den out here? And Bill says review of moon tides and Tim Boss inflection. Also at boss time. Okay, so that's just something that Bill had posted out there. I had mentioned the spot volatility index, which is trading down 16 pennies at 15.13. So this is quite interesting. If we take a look at the 50-day exponential moving average, it's 15.22. 15.22 out here, and we're trading at 15.13. Now look, watch the end of the day. I don't know if the moving average is going to change by a penny or two, but so give it a little bit of wiggle out here, but really, even though it's trading below there, you got the advanced decline oscillator reading below zero out here. It's kind of a coin toss. Look, here's the deal. If the spot volatility index closes above 15.22, And I'm going to assume at this stage here, unless there's one huge rally going into the close, that the AD oscillator is going to be below zero. It really supports that counter trend rally. And then if that's the case, maybe JP Morgan, maybe it's not the best time to step into it out there. But that's something for us to watch at the end of the day. The 50-day exponential moving average of the spot volatility index, and that is trading out at 1522. Just watching Brooks Koepka's drive in the foreground out. Man, the guy just crushes it and sticks it in the fairway. You gotta love that. Who wouldn't like to do that? All righty, so we're about to go to break. Dow's up 36, S&P is up a half, NDX down 19 points. I'll try to come up with something good for the 2-minute wrap, and stay with us. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Flat NASDAQ down 20. I wish we could find uniform messages out here. That way I could do the 2-minute wrap and and do it with conviction. Always good to have conviction. If we take a look at the Dow, we don't have conviction here, at least as far as the signals are concerned. Now, if we take a look at the Dow, and we generate a reading here as to the unfavorable seasonal cycle that we're in, and that typically is, and that is based around the data of the Dow. Only if the Dow this week, today, were to close above 26,159, would it negate that potential pattern. That's Stevie's green line. Looks like we're going to close below it, and that is suggesting to you and I that we are in full effect into the sell in May cycle out here. But if we look at, and I don't know where the week is going to close, if we take a look at the S&P 500 on a weekly basis, we're going to see that prices really just trading slightly above that. Let me get that data box out. Again, let me open up the cursor. I'll give you that number. That number is 2871.28. That's the weekly Stevie green line for the S&P 500. We're 2876, so about 5 points above that right now. But it's, if we close above it, it says, what the S&P says is it wants to go up and make a higher high out there. That would be its message. The New York Stock Exchange, a little wider swath of the market, prices trading below its level out there, its green line, and that, see how the line had turned from red to green. Last week was a test and rejection. This week, that was a bullish test and rejection. This week, we got a bearish test and rejection out here. 12,754 is the number there. A close below is suggesting that the sell in May cycle is in play out here. So, folks, thanks so much for being here this week. I've enjoyed it, as always. Have a terrific weekend, fabulous weekend. And stay tuned. Our favorite polar bear, David White's up next. Tom O'Brien, 3 to 5. And we'll see you on Magnificent, Magical, Marvelous Monday. Take care and be good.